Hello friends and welcome back. Friends, the year 2021 was a year of boom in stock trading. The market saw many new entrants in the share trading and the trend continues even in the year 2022. Many of us have also started trading in futures and options, which in short is called as FNO. We will not discuss कितनों ने कमाया and कितना कमाया. Neither we are going to discuss how to trade in FNO. But as far as tax on FNO is concerned, what I have observed is that there is a lot of confusion among the traders on how income from FNO trading is taxed, especially whether in the case of FNO, presumptive tax is applicable or not. If yes, whether it's always mandatory. Say, for example, in case of losses. Also, when is tax audit applicable? Turnover limit for the purpose of tax audit eligibility is a big challenge in case of FNO. As you know, if we consider the contract values of FNO, it can easily go into crores. I've even seen in some of the WhatsApp groups, CAs advising people that if there is loss, you still have to pay tax on 6% of your turnover. And if not, a tax audit is mandatory. So today we are going to discuss all the aspects of tax on FNO trading, and I'm going to clear all your doubts. So let's begin. Now, if you are already trading in FNO, then you know what FNO is. I'll tell you in brief what are FNOs. So technically, future is a contract between two parties wherein one party gets an obligation to buy or sell a particular asset at a future date at a predetermined price. On the other hand, in case of option, you get a right but not an obligation to buy or sell a particular asset. So futures and options are derivatives, means their values are derived based on the underlying assets. These underlying assets can be anything. But since we are talking about trading of FNO on a stock exchange, in our definitions, these underlying assets could be either shares or some index like Nifty. So when we buy a future or an option, we get right to buy or sell the underlying share. Now we know that these rights can be bought and sold on a stock exchange. Trading in these rights is called as FNO trading. We can discuss in detail how FNO are traded maybe on some other day. But today we are going to talk about tax on profits from trading in FNOs. So as far as income tax is concerned, profit and loss from trading in FNO is not treated similar to trading in shares. While in case of shares, we are talking about listed shares. So in case of shares, if the shares are held for more than a year, it is taxed as long-term capital gain. If the shares are held for up to a year, then generally short-term capital gain. And if the shares are bought and sold on the same day, means intraday trading, then profit and loss is treated as speculative gain and loss because these are done without getting physical delivery of shares. However, in case of FNO, even though there is no physical delivery, still gain or loss are not considered as speculative. On the other hand, it is considered similar to income or loss from any other business, which means you can deduct your expenses related to FNO business against your income. If there is a loss, it can be set off against income from any other business and even against income from any other source except salary income. Third important point is any remaining loss, means unabsorbed loss, can be carried forward to future years for 8 years. Now, if you are doing a business, you also need to do accounting for it. So when you are, when are the books of accounts required to be maintained? So similar to any other business, first of all, it will depend on your status as a taxpayer. Means whether it is an individual, HUF, firm, or company, etc. In case of individual or HUF, books of accounts are required if turnover is more than rupees 25 lakhs or your income is more than 2.5 lakhs. You have to check your sales and profits for the last 3 years. So in case of individual and HUF, books of accounts are required if turnover is more than 25 lakhs or income is more than 2.5 lakhs for any of the preceding 3 years. Now, what if it is a new business? Means you are doing it for the first time. Then in that case, books of accounts are required if your turnover is likely to exceed 25 lakhs during the year or your income is likely to exceed 2.5 lakhs. So if you expect your turnover will be more than 25 lakhs or your income will be more than 2.5 lakhs for the current year, you have to prepare and maintain books of account. Now, in case of other SSCs other than individual and HUF, this limit is 10 lakhs and 1.2 lakhs. So 10 lakhs for turnover and 1.2 lakhs for profit. Now, if suppose someone doesn't want to maintain books of account, is there any way out? So yes, under section 44 AD of the income tax law, if a person opts for a presumptive scheme of tax, books of accounts are not required to be maintained. First, let me tell you in brief what a presumptive scheme is. So under the presumptive scheme, an option is given to pay tax on 8% or 6% of your total turnover without actually maintaining your books of account and without computing actual profit. The 6% is rate applicable for turnover through banking channels or digital channels, means other than cash, and this 8% the rate applicable for cash turnover. यहाँ पे जो रेट है वो प्रिजम्पटिव प्रॉफिट का रेट है, टैक्स का नहीं है, इस बात का ध्यान रखा जाए. So for FNO, since the transactions are digital, you can simply assume that 6% of your turnover is your income from FNO trading and pay tax there. Now, important thing about the presumptive scheme is that it is applicable only for individual, HUF and partnership firms. Secondly, it is applicable only to persons who are resident in India as per income tax law. So it is not applicable for non-residents. It's not applicable for NRIs. Now, a company can't take the benefit under this section, and even LLPs cannot avail this benefit. Means they are mandatorily required to keep books of accounts and calculate actual profit and pay tax thereon. Also, if you are earning income like commission or brokerage, or you are a professional like doctor or lawyer, or you are in a business of applying, hiring or leasing of goods, then also you cannot take benefit of presumptive scheme under section 44 AD. Now, second important point is you can take benefit under this scheme only if your turnover is up to rupees 2 crore. So if your turnover is above rupees 2 crores, you cannot avail the benefit of this scheme. Now, the last and the most important point is, which is a little bit tricky, is that although this presumptive scheme is optional, means you can opt or not opt, but if you have declared your profits as per presumptive scheme, that is 8% or 6% for 1 year, and then if you do not declare your income as per presumptive scheme for any of the next 5 years, then you will not be able to take benefit of this scheme for next 5 years subsequent to the year in which you opt out of this scheme. That means if you have opted for this scheme, then you have to opt for this scheme for next 5 years also. If not, you will not be able to opt for this scheme for further 5 years. Not only this, if you do this, means that opting and opting out within 5 years, then you will be required to maintain books of accounts and also get these audited if your total income exceeds the maximum amount, which is no chargeable tax. Now, coming to FNO, in case of FNO trading income, whether we can take benefit of the presumptive scheme? Yes, we can take. Is it mandatory? No, it's not mandatory, as we just discussed. Now, talking about audit. So when a person who is trading in FNO is required to get his account audited under the income tax law. So audit is applicable only in 2 scenarios. First is the case where your turnover is more than rupees 10 crore. Here we are talking about FNO business income, because in other businesses, if the sales and purchases are through cash, then this limit may be rupees 1 crore. So an audit is applicable if turnover is more than rupees 10 crore. Now, the second scenario is if you opt for presumptive scheme and then opt out within 5 years, as we discussed in previous section. So in this case also audit is mandatory. So audit is not mandatory in all the cases. If you are incurring loss or your profit is below 6% of turnover, then you can think of paying tax on actual profits and not on presumptive basis, and that too without audit. If your turnover is less than 10 crores and you are not opted out within 5 years for presumptive scheme. I hope it's clear to everyone. Now, talking about turnover, you would say that in the case of FNO, the turnover can easily cross 10 crores. Then what is the case? What is the use of this discussion and the limit of this 10 crores? So hold on. In case of FNO, as per a guidance note issued by the ICAI, a special mechanism is given to calculate turnover for the purpose of this limit of 10 crore. So in case of FNO trading, for the purpose of tax audit, turnover is the sum total of profits from favorable trades and losses from unfavorable trades, plus if it is sale of options, any premium which has been obtained on sale of options, and if you have entered into reverse trades, the difference on that also. Now we'll understand this by taking a simple hypothetical example. I'll share my screen with you. So you can see on the screen, suppose you have entered into these 6 trades, 3 for futures and 3 for options. Now, as you can see, column F is your buy value, column I is sell value, column J is your gain or loss. Now, if you take the sum total of sell value, then it is around 14.4 crores. So which is more than 10 crores. But we have to calculate it differently. So remember the first step, we'll take gains from favorable trades and losses from unfavorable trades and total it up. So in short, what we can do, we can take absolute values of column J and total it up, which comes to just rupees 1.35 lakhs. See, so then we see the total premium received from the sale of options. So we can see in column I, sell value. So we'll consider only options. So we'll take only the last 3 transactions. So it comes to rupees 10.7 lakhs. Now we'll total up these 2 columns. And the resultant figure, which is just 12 lakhs. So 12 lakhs is your turnover from FNO for the purpose of tax audit. So in this case, tax audit is not applicable. So one more question which could arise is whether to do this turnover calculation script wise by considering average cost or do it transaction wise. So although there could be practical challenges while doing it transaction wise, still it is always advisable to do it transaction wise. So just to summarize today's session, gains from FNO trading are treated as normal business income and not speculative gain. Losses can be set off and carry forward. Books of accounts are mandatory if you cross certain monetary threshold, but not mandatory if you opt for presumptive scheme. Tax audit is mandatory if your turnover exceeds 10 crore. Turnover for the purpose of audit may be calculated by special mechanism as per ICAI guidance note. And lastly, if you opt for a presumptive scheme and opt out within 5 years, you cannot opt for it again within the next 5 years. And both books of accounts and audit are required in this case. So friends, I hope the video was informative and all of your doubts regarding tax on FNO trading are cleared. If you still have any doubt, you can write in the comments. Till then, bye and take care.